Oil, slightly positive in holiday trading. Before we start, a quick word from our sponsor. This video is brought to you by XNS, the world's largest retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The West Texas Intermediate crude oil market has been slightly positive in the early hours on Wednesday, but has given back a little bit of the gains, as I think liquidity is probably going to be the big story here. After all, it's Juneteenth in the United States, meaning that the futures markets themselves are closed during the U.S. hours, which is where most of the liquidity is found. The electronic overnight trading, of course, does come into play, and that might be part of what we've seen. But I think at this point in time, you need to pay close attention to the $80 level. The $80 level is a large, round, psychologically significant figure and an area that previously had been resistant. So I think a pullback to that area probably attracts a lot of market memory and a lot of people willing to jump into the upside, and therefore I think it offers tremendous value. In the Brent market, we have peaked above the recent resistance area at $84.50, and now we are pulling back towards it. I think this is the same situation. We are going to see buyers jumping into this market to try to push it higher, but whether or not it can actually happen on Wednesday might be a completely different question, as liquidity might be an issue, as I stated earlier. So with that being the case, I think this is a market that ultimately breaks out, and you look at pullbacks as potential value that you take advantage of. I have no interest in shorting oil. There's far too many geopolitical concerns out there. And then, of course, you have to think about the cyclically demand cycles that we have when it comes to crude oil, which typically peaks over the next couple of months. If you like the video, give me a thumbs up and subscribe.